The following is an update and technical analysis on crude oil West Texas Intermediate futures based upon the daily interval, in which I will additionally deep dive into the 60-minute time frame. And I believe we are gearing up, re-challenging a major primary reactionary parabolic downtrend line that I had continued to hype and harp up for months on end here. And here we are. We ended up having a back test the day before yesterday, really close to the button there, and that was rejected pretty impulsively right back down to the 72.70 price support for 2.6% drop to the downside, only to be heavily defended by long traders and or bull traders upon that key transition point, ultimately taking out the primary downtrend line. And we are now hovering slightly above the 73.94 price resistance, which was for another almost 2% gains to the upside. And this is a key inflection point. I would have loved, especially if tomorrow we get a very solid green, big infused candle close breakout above, would issue an additional buy signal and or key inflection point that has been confirmed, taken out with conviction for a potential paradigm shift. And especially as the Fed eases financial conditions, it may potentially open the door to increased energy and commodity prices, where you consider the myriad of factors affecting crude prices, with geopolitical tensions acting as a bullish force, while factors like potential China lockdowns exerting a bearish influence. From crude Cushing builds to various other considerations, the landscape in general is complex and will come with volatility in both directions. For now, the technicals be the beacon to the light of which inflection points and or risk reward short trade setups and or long trade setups could occur for a bigger move to the upside. You have the 200-day and 50-day moving average flatlining right above the 618 fibs retracement, which would be the second additional target if and when we go on to re-challenge and take out the 75.27 price resistance on a much more bigger move to the upside. We have confirmed bullish crossovers in the moving average convergence, with the stochastics 1033 hovering right up above the 85 threshold. So health is beginning to be poured right back into these technical momentum indicators, with 2 out of the 4 indicators with exaggerated positive and or bullish divergences. Short sellers, bear traders, they want to see, as for short sellers, bear traders, they want to see this as a false breakout on a potential bigger move to the downside, re-challenging the 786 fibs retracement, 72.70 price support on a, and then ultimately taking that level out would transpire on a bigger move right down to the 70.09 price support and a potential confluence of the parabolic downtrend line. Once again, I'm trying to get this video out. As for now, the sentiment and the technical structures of the price action of crude oil is bullish when you have this key inflection point being taken out, especially if you caught some of the long trade setup on a bigger move to the upside, where I had mentioned this primary bullish falling wedge pattern that we broke out of. We ended up taking that key inflection point off here at the 60-minute interval time frame, had bullish and positive divergences on all 4 technical momentum indicators, large divergences, and that would transpire on a much more bigger move to the upside. We ended up breaking down below the 0 fibs retracement, only to backtest it 2 times in a row there, where we additionally put it in positive divergence. Nice clean divergent low. We had positive and or bullish divergences once again in the near term. On the RSI, all 4 technical momentum indicators, large divergences, positive divergences, recovered the 0 fibs retracement, backtested once again, really to the button there, especially for any active and or day traders, and boom, it was off to the races since. I have this new renewed primary reactionary uptrend line with major reactionary lows now. That is a key pivotal inflection point that long traders and or bull traders must defend heavily at all costs if and when we revisit and backtest some of these key transitioning points of price support and confluence of the 50 hourly moving average up above, hovering down below. So these, what, make no mistake about it, we are in a near-term uptrend. Do not underestimate the potential for a resurgence in the world's master resource and commodity, often referred to as black gold.